was so proudly we hailed at the twilight's last gleaming, whose broad stripes and bright stars through the perilous fight. Oh, the ramparts we watched were so gallantly streaming, and the rockets regular up on spur, singing out, yeah, through the night, that our flag was still there. Oh, say, does that star-spangled banner yet wave? Oh, the land of the free and the home of the
Good Monday morning. This is World HD streaming live on Rumble, X, and YouTube every weekday at 8 a.m. Eastern Time. Today is Monday, October 20th, 2025. And on Mondays for us, it's Currency Day. There's so much stuff going on in South America. I really want to dig into that this week. But yesterday, there was an interview I saw that was going to happen over the weekend with Prime Minister Carney of Canada. And so instead, I think what we'll do is do a little bit on Canada Day, take a look at the currencies, take a look at the Canadian dollar, because it's been quiet, right? Not much. We haven't heard much out of Canada. I assume I'm expecting that in the next couple of days we're going to hear. Give it a week or two. We're going to hear new trade stuff popping through with Canada. So we've got some clips to run on that today as well. Okay, that's how we'll hit the currency today, and hoping you all had a great weekend. In the Midwest, like I was saying, it's probably one of the nicest late summer, early falls that I can ever remember. And then yesterday we got hit with, or the day before we got hit with a front that came through, and it's now cold and rainy and gray. so I think this is the beginning. We're in for the end of this. Now, soybeans are a big issue, and the harvest season's in place too for the Midwest and all through the Great Plains and everything, and in all that region. And so China is in focus. And so we're going to talk a little bit about the soybean. The soybean thing's becoming a bigger and bigger issue. All right. And as we suspected, so we'll take a look at the soybeans today too. Remember, we have that harmonic structure on there. We're kind of floating around the halfway. We'll take a look. It'd be really nice if that thing got exhausted on the downside. We got a full downside objective in that thing, because for me, I think that would be a great place to come in and take a chance on this thing. Are we going to get that? I don't know. Let's hope so, but it would be really nice if we did. Okay. All right, let's see here. Day 20 on the government shutdown. So when is this thing likely to get some traction? I would say the end of the month to the 1st of November, and there's a couple reasons for this. We've talked about this financially. There's quite a bit coming together at the end of the month. October to 1st of November, we have the Fed meeting. We have big tech earnings coming in. We have this China trade deal. The 90-day situation comes to an end. Are they going to kick the can down the road? Are they going to renew it? Are they going to try to take a couple bites on this China trade situation and then kick some of the can down the road, maybe kick half the can down the road into February? So it's something we want to watch the next couple of days. There's three major topics on President Trump's mind: the fentanyl, the soybeans, and then the rare earth minerals and metals. So those seem to be the key things. Remember, a couple weeks ago, the whole TikTok thing went through with ByteDance, Oracle. Not real happy about that whole deal, because I think there's a lot of future problems to come because of that deal. We'll see what happens. that it is what it is. So that's where we're at on that thing. But on the political front, we have the New York City elections coming into play. Then we have this No Kings rally stuff that's really starting to hit and face the Democratic Party. Schumer, Jeffries, none of these guys want to stand up to this. And then we have the healthcare enrollment confusion. Okay, this is sort of a big deal. We're going to cover this week in the Technocracy Roundtable. I think we do that Wednesday evening, and then Aaron Day is going to be on tonight covering healthcare as well on his show at 5 o'clock, 5 o'clock, 6 o'clock. Anyway, this evening, I think it starts at 6 p.m. Eastern time. I'm pretty sure that's when it starts. I'll probably try to join him, jump in at the end, and do some Q&A with him. If you want to check that out, you can find it on X at Aaron R Day, so AARON Day. And you can find it at the AaronRDayshow.com. I think that's it. You can find it. If you're looking for it, you can find it. He does great work. I would say, if you can, find the first hour of it because he's going to go through a lot of slides. He always goes through, maybe step in about 6:20, 6:30, something like that. Let it get started. And then he'll hit, I don't know, 30 slide decks, probably more, 30 slide deck. And it'll be loaded with information on this healthcare stuff. And I'm also going to use it too for a precursor for things that I've missed because I've got my angle for this Technocracy Roundtable from the healthcare perspective, from a financial angle. I also want to get kind of a feel for what he's doing. And so we can kind of clean some stuff up for my part in that on Wednesday. Okay. And the economic data. So let's go ahead and jump in there and hit this. We got a few in the room already this morning. BDG, good morning. Hope you had a great weekend. Geo Rich, Rachel, morning. I wish it was a second Sunday. Yeah. Rachel's introduced me to this term called the second Sunday, and it's kind of growing on me. I like the idea a lot. I don't know when I'm going to fit it in, but I like the idea. Trumpet, good morning. Good to see you. Crash and Splash. Typhoon in Alaska. Wonder what government will steal this time. Okay, that's a good one. The Gordon Q, must be some rare earths up there. Guess we'll find out. Good morning. Good morning, Frank. All right, Gordon. Okay. All right, sounds great. Let's hit this economic data. I want to get this going, get through this. There's not a lot going on the economic front. Mostly because obviously still the government shutdown. At the end of this week, we are going to get they're saying that we're going to get the CPI data, so the Consumer Price Index data. They're saying we're going to get that. We'll see. Let's see how this goes this week. Okay. Big picture for this week. Let me clear this off. There we go. Hopefully that clears it off. Okay. Let's get rolling through this stuff. Let me clear that too. Nothing. All right. Okay, I worked on some of these things this weekend, but still obviously don't have it ironed out. Okay, so we've got this Monday, not much. CB leading index, it's a small number in the U.S. Kind of have to put something on there for Monday. There's just not much going on. We'll check this out. It's all economic data can have an impact. This one in particular, probably not a heavy hitter. And then we get Bank of Canada Business Outlook survey later today. Tuesday, this is a hodgepodge, right? This week is a hodgepodge of data. So there's no real theme here to me other than maybe there will be some data coming out at the end of the week out of the CPI data, for the US on the consumer price index component. Tuesday, we'll get the China. If there is one theme to take out of this, it's China. And I want to go through, we'll do that. Let's go, after I get through this, let's take a look at the China stuff because there's a lot of data that came out Sunday night. And I think it's trying to be portrayed better than what it is, okay? Especially with the trade negotiations going on. I think China's trying to paint a rosier picture than what's really there. Because if you watch the headlines, they're coming out and saying they can still hit targets on their growth, but then you see the actual data and it doesn't look so hot. And we talk about this foreign direct investment. We're actually going to get foreign direct investment out of China. I think I have that. Yeah. So Tuesday, we're going to get that out of China. I'm interested to see what happens on that. So it shows that it's down about 12 to 13%. What if it's more than that? What if it's a 15 to 20 or 30, 25? I don't know. Are they even going to admit to it if that's the case? This is what we've been talking about. China, again, back in the day when China was built, this is how they did it, was they forced and encouraged foreign direct investment into China. So again, all these private equity funds, okay, that are connected in DC, connected to the legal firms, connected to the whole political mechanism. they go in there and they go into China and make a lot of these private equity investments. Why do they? Because they know they're going to be driving business there, right? They're putting in the policy in place to allow this to happen. And not only that, they're probably teaming up with their buddies at all the consulting firms, okay, the big consulting firms, that originally kind of fell underneath all the big accounting firms, but then they sort of went out on their own, like the McKinseys and the Bains and the Arthur Anderson and all these groups that are out there. There's a whole slew of them. They were the ones that created this boilerplate situation that okay, so it says, yeah. Okay, well, hopefully the audio is okay. It's showing okay on my end, but apparently something must have gone down a little bit. Okay, let me know if it's any better. There's not much I can do. I guess I can jack this up just a little bit. See if I can take that up a little. Is that any better? We'll see. Okay, so back on point, what was I saying there with, well, let's just keep rolling. I kind of lost my train of thought there. All right, but the foreign direct investment, I think that's going to be important. I really want to watch and see what happens on the foreign direct investment end of things with China. Oh, I know, with the accounting firms. So the consulting firms, so they was sort of front ran the whole private equity situation into China. And boy, what was I going to say on that? Well, back to the foreign direct investment. Is this is it coming out of China? Is the foreign direct investment starting to back off a little bit? And is President Trump having that impact? And that's really the thing, right? When we watch these clips today with Carney of the Prime Minister of Canada, that's the one thing I want to keep in mind is how much of an impact is President Trump having? And it seems like quite a bit. That's why I like these clips with Carney more than anything, is that it gives us a read as to a guy who's clearly a globalist. Okay, he's worked for Bloomberg, he's worked for the Bank of England, right? He's worked for the Bank of Canada. Okay, he's been a central banker. He's clearly in this World Economic Forum globalist mechanism, and then I'm not sure that the Canadian election was totally stand up because we know Trudeau was in there and his numbers were terrible. And then Carney comes in and it's another globalist, okay, just like Trudeau. But we're seeing differences in Carney. And that's what I really want to point out today. Is President Trump having an influence and a positive influence and sort of almost forcing Carney to be real instead of a global puppet, okay? That's a takeaway. So again, back to this China situation with the private equity. Is it not going in there? Is the foreign direct investment not going into China? And is this part of what Bessent and these other guys know? Even though I came down on Bessent pretty hard last week because I just don't understand his angle on stuff. It just doesn't make sense to me. But nonetheless, they can feel the attrition occurring in China. So again, back to these propped up numbers in China. So we'll take a look at that here in a second. Okay. Keeping rolling with this week, we get a little bit more speak out of European Central Bank President Lagarde. She was at the IMF last week speaking. I'd like to pull some clips out of the IMF. It's just there's so many hours of stuff to comb through to really find 2 or 3 clips that are valuable so it's time, and we'll see if I can pull that off, if I can comb through some of that stuff. I'd like to hear what the sentiment was. Why? Because a lot of this is based around Europe, and I'm very interested in what's going on with this euro, and I want to know, like, where's the breaking point for this euro currency? What we see all this stuff going on in France, and we'll talk about that a little bit. They had a downgrade in their bond rating. But we see this stuff going on in France, and what's the breaking point at this point? Any little clue we can get, I think, is to what these European bureaucrats, or otherwise known as Eurocrats, what they're up to. So again, want to see what she has to say. That's why I pay attention to that. We get a little more data out of Canada tomorrow. Canadian CPI kind of goes with the theme on Canada. UK, we get UK CPI out on Wednesday. Again, we get Lagarde speaking on Wednesday. And we get our Wednesdays, we always get our crude oil inventory. And then again, Canadian retail sales on Thursday. So a lot of this is Canada. And that's why I think this theme of trying to cover the stuff on Canada. I think this is going to come. I think we're going to see in the next week or two some things happening out of Canada again. It's going to go from quiet to maybe very active. We'll see. And then a little bit of stuff out of Japan, always watching that with flash manufacturing PMI on Thursday. And then Friday, wrap the week up again with German flash manufacturing PMI. So so this is the Purchasing Managers Index. And this is interesting because it can tend to be a forward looking indicator. And that's why it's nice to watch the global, see if there's a theme with these purchasing managers indexes. If the purchasing managers are feeling some sort of a slowdown or some sort of a wrench in the cogs in the gears, they'll usually start to back off, or they'll get indications to back off. So that's what we're watching for with these PMIs. And then the U.S., the CPI data hopefully comes out on Friday. We'll see how that goes. And then we also get a flash manufacturing PMI data. So again, that would be Japan, Europe, and the U.S. for the flash manufacturing PMI. So out of that, we can see if there's a theme that comes out of that stuff. Okay, let's take a look at Friday. Just a quick recap. There wasn't much going on Friday. Again, Canadian foreign security purchases were actually up. Again, it's not an outstanding. It's nothing. It's a strong number. Maybe we'll look at that one too while we're at it. We're looking at this China data. Probably we won't because I have to go back a week. But the point is that it's a high read. It was expected 11.61. It came in at 25.92. So it's a pretty solid beat, but there's 4 or 5 readings over the last few years that are higher than that. So it's not like it's a breakout number, but it is on the high side. And it's 2 months in a row that have been pretty strong. So interesting things to watch out of Canada. Why does it matter? Again, back to the Canadian dollar. Want to watch what's going on with that thing, and the Australian dollar. These are 2 commodity currencies that I think can become very important in the next 3 to 6 months. Then we get more speaking out of Germany. This is Nagel. He's always speaking. This guy's active, but he is on the economic side, right? This Bubba is kind of the economic, I don't know. It's an aggregation of data, and that's probably worth doing a short thing on sometime. When the European data really starts to matter, we'll probably do something on that with this whole how the Europe kind of aggregates this data. And then IMF meetings were happening all day Friday, and then FOMC Muslim was speaking. Again, a lot of Fed speak last week. If there was a theme to last week, that was it. Okay, so Monday today, German PPI, Producer Price Index, month over month, was out 0.1. It was expected. It came in slightly lower than expected. So again, deflationary. Remember, we haven't talked about PPI and CPI in a while just because it's been quiet, but the PPI is up the chain, Producer Price Index, up the chain from the Consumer Price Index. So it tends to be a leading indicator of the Consumer Price Index. So this is a deflationary thing in Germany. And that means essentially they may be having to lower prices overall to continue to stimulate purchases. All right. Okay. And then European current account, that came in negative. Probably won't get into that today. The U.S., we get that CB leading index month over month. And the Bank of Canada Business Outlook Survey. That's when we talked about, interested in this. I'm very interested in what's going on in Canada this week. Okay. And then we've got the Bubba. All right. Let's go ahead and let's jump over and look at this stuff. I want to jump in here and see let's take a look at this stuff on China. Here we go. Okay. So here we had last night, we get this swath of Chinese data. So that's all the stuff here in this column, CNY. All right. This currency. Okay, so pretty much everything. 9 o'clock last night, it started coming out. We got China short-term loan rate stuff, like 1-year, 5-year loan. Then we get these new home prices. And here's what I want to start going through is just to see the weakness in China. Okay, so you can see here, this is the Chinese home price data, month over month, going back, to 7 years, 7 or 8 years. And really around that mid-2021 timeframe, going into 2022, it went negative other than that one little blip up in 2023. And that was probably because of a stimulus package that came through, if I remember correctly. But all in all, the new home prices have been pretty negative. This is a big sticking point for China. This is part of what they've been trying to stimulate, okay? But they just haven't been very effective with it. One of the big things was the housing, okay? Again, keeping the people happy. All right, then we had GDP. So this is a number that they say they can come out and meet or beat. Okay, this 5% target. I don't think they're hitting this. This goes back to that foreign direct investment. If they're not getting that foreign direct investment, it's going to be really hard for them to meet this target of 5% on their GDP number. They're not meeting it, but you can see they're kind of trying to keep it up around that level. Now, if it wasn't for COVID, okay, you can see the spike down and the spike up. those two big ones that stand out on the chart, you can see a gradual trend starting in 2009, this downward sloping issue with GDP. That fits. Okay, the 1980s, 1990s, early 2000s, all this foreign direct investment's going into China, and then it sort of started to stop, okay, after the real estate crisis. And it's been on this downward sloping trend for quite some time. And without that COVID stuff in there, I think it would be it'd be just a nice slope, I don't know, little slope down. So where is China really on this GDP? Are they at 3%, 2%? I doubt they're negative because, but we see this stuff going on. Again, keeping in mind Canada, connections with China, okay, automotive stuff coming through Canada and Mexico, right? Trying to cheat the protections that the U.S. had for Chinese goods coming in, right? They would push them through Canada, push them through Mexico, and again across borders, lots of confusion, okay. And then we have boy, I'm drawing a blank on this one too. Where was I going to go with that? Here's the thing: is that the big takeaway is, will that come back on China? Okay, as we start to choke off Canada and we start to choke off Mexico, and China can't get away with that, and can't. So one, we're putting tariffs on them straight up, and then we're stopping their backdoor channels through Canada and through Mexico. That puts pressure on them again, okay? And the foreign direct investment going down, that puts more pressure on them. And then Europe, the trade arrangements with Europe aren't strong, right? And the whole world, again, and this whole concept of President Trump not just saying that this is the U.S. against China, right? That this time saying it's the world against China, okay? We keep seeing that theme coming through. And we even saw Bessent just come out and say that last week in a couple clips, right? It's not the U.S. versus China. This is the world against China on the rare earth metals, all right? And we talked about that pretty deeply on Friday when we compared it back to COVID. Okay, so let's take a look at the industrial production with China. Pretty flat, no big deal there. Okay, so again, this tells us, how much industry, it's not growing, right? It's pretty much flatline. We get China retail sales, okay, not great. You can see it's flat to maybe even recently, 4 or 5 months of a decline. If we look at the last 4 or 5 bars, but mostly flat. Again, you take the COVID, just try to ignore the COVID spike, the spike down, the spike back up. And then that 2023, you can see that spike up in 2023 again here. I think this came with that stimulus package, right? This was one of those and that goes back to the housing, right? If you connect that back to the housing, I think that was that stimulus package that China, one of them that they tried to push through. And then we looked here at fixed asset investment. Okay, that's actually flat. You can see it going down and almost turning negative, right? Actually, I think the last read is negative. It's a negative 0.5, which they haven't had since COVID. Okay, since the COVID deal, this is the first. So again, not looking good, but again, keeps trying to post these good numbers, right? That everything looks good. And then we get a couple things here on the unemployment rate. You can see it's starting to creep up. I would say it's either flat to maybe potentially creeping up on the unemployment rate. Not good, right? Not something that China wants coming out, right? Is that their employment numbers their unemployment starting to creep up. That would not look good. Okay, so I think that gets that. And so again, why does Canada matter? Why does Canada matter? Because it's our one of our biggest trading partners, and they're our neighbors to the north. And we've seen these interactions with President Trump, Prime Minister Carney. We've seen the hostile, as much as saying Canada is the 51st state. And Carney would say, no way. And then President Trump would say, well, don't be so sure. Again, just toying with him, playing with him, okay? And that's what we're going to see come through in these clips today. But the ultimate situation here is, again, China. Does this stuff start to impact China, right? The cleaning things up with Canada. I think next year it's the renegotiation of this USMCA, okay? I think it had a term that goes into next year. But what they're doing now is they're almost preceding that by trying to get trade deals that get outside of the USMCA. So the USMCA was an advancement over the NAFTA, but then we get this USMCA, United States, Mexico, Canada agreement, and it's better, but it's still not perfect. There are a lot of things you couldn't work through. Now I think what they're trying to do is just do them straight up, right? Let's just do a trade deal with Canada. Let's do a trade deal with Mexico. That way, there's that one less little bit of influence, okay, that separate, right? Divide and conquer to some degree, okay? And how do you do that? You divide and conquer Canada and Mexico, put the pressure back on China. They don't get away with it. So again, this is that, I think this is why China's been left for last on this trade negotiation thing, right? Is to just sort of encircle them. Okay, let's roll through some of these headlines. We've got government shutdown. We talked about that. China economic data claims. That's what we just went through. Don't think it's as strong as they want to portray it as good. When you watch the headlines, they want to say, oh, yeah, we can still hit our target of 5% GDP. But I think if you look at that data, it doesn't look so hot for them. Okay. Then we get this Amazon Web Service outage. Okay. This is, oh, let me go through that. Before we do that, I wanted to go through one or two things here. I've totally lost track of these. My mouse. Okay. Let's pull this one up. I wanted to show you this. This will kind of fit with that as well. All right. So here is China's growth. I've got this chart and we have this. We have real GDP, okay, in the pink. We have real GDP is in the black. We have the industrial output in the pink and the retail sales, okay, in the gold. And the industrial output, we looked at that number raw, okay? It was flat to maybe down, right? And then we look at the GDP. You can see that black line, especially for 2025, rolling over. When did President Trump take office? Early 2025. So you can see this starting, and they were starting to turn up into there, and then it kind of rolled over again. So you can see the black line rolling over. The pink line is, I'd say, flat. Looks a little bit more positive than the others. But then we see the retail sales really making a press down against, the lows around the 2% range that we saw back in 2024. This is post-stimulus, right? There was another stimulus package that came out in, I think it was maybe October of 2024 out of China. But these stimulus packages have been failing. And I don't think China I don't think that their system can handle it. Again, they don't have this consumption engine inside that like we do, where we can run up these massive debts. Okay. They don't have the cash flow system that we have, right? They are dependent upon outside sales, right? They're dependent upon selling all their stuff around the world and then money coming back in. They don't have that internal situation. So this is why I think it matters. This is what Scott Bessent is saying. China, given time, is going to weaken or maybe implode. Okay. And then we'll see what happens. Do the people actually turn the thing around? All right. Do they actually take a role in this thing? All right. And then this week also, we have a couple things coming out, a couple big earnings things this week. We've got GM Tuesday, Netflix, Tesla on Wednesday, Intel on Thursday, and then the CPI data potentially on Friday. We'll see how that goes. And these are obviously the big tech ones, right? Netflix, Tesla, IBM, and Intel. This is the front end of that. The big ones are going to, of course, be, the Googles and the NVIDIAs, and the Microsofts and all these big ones are going to come next week. But this is the kind of that kickoff. These are some big names. They're not the biggest, okay? But it gives us some kind. Tesla's pretty big in a lot of ways. They're all big. All these are big. Intel's been in the news for the last month or so with the U.S. taking a 9.9%, basically 10% stake in Intel, and then NVIDIA coming in and taking a stake in Intel as well, multiple $billion deal. And we've talked about these circular references too, right? NVIDIA taking a circular reference with Intel, with xAI. That's, tied in with Elon Musk. So it's somewhat connected to this Tesla thing, maybe fairly connected to it. So this is the beginning of that earnings. And this leads into the end of the month, right? The end of October, early November. It leads into that. And again, that's what we're talking about. A lot of things, government shutdown potentially coming to a head there. The Fed, all these economic things coming through at the end of the month. Okay, so hopefully we can gives us a decent picture. Okay, we come back in here, keep rolling with this stuff. Okay, so this AWS outage. All right, this isn't, to me, this wouldn't normally be that big of a deal, but I think it's becoming a bigger deal, and here's why: is that. So Amazon's going to investigate this outage, okay? But it's impacting, I think, 12 major companies. Some of them are like Perplexity, Coinbase, Snapchat, Verizon, Robinhood were some of the ones that got listed out. That by itself isn't that big of a deal, okay? But last week we saw there was a cyber attack, okay, that impacted a $4.3 trillion municipal bond market, okay, in the U.S. I don't know all the details on it. It was very skinny, very light information around this thing. So again, I want to research this, pay attention, see what it was. They announced it, but there was not much content around it. And but we're starting to see this. Okay, could this be? We can almost anticipate a false flag coming, because it's like every 5 years, right? I mean, they're almost to that point where the deep state's pumping these things out. Okay, what would this one be if there was going to be one? Well, we know the World Economic Forum talked about this cyber polygon. Klaus Schwab said, that would make COVID look like, nothing. It would make these other wars and things look like nothing. So are they, and then we hear internet outages all the time. Like, I see it happening constantly. Like, even my internet's been spotty, and I talk to people and their internet's spotty, right? And it's all around the country. Everybody's internet seems spotty. And it's almost like they're playing games with their son, maybe testing something. So again, we have to be cautious on this. When we see this is big time, right? When Amazon Web Services goes down, this is a big time deal. And what's the result of this? When 4.3 trillion of U.S. municipal bond debt is at risk, and so to me, this stuff continues to be more and more concerning, right? And that's why I wanted to mention this. Just something for us to keep watching, because this could be one of the things that impact the stock market, of course, right? It could impact the way we live, okay, if there's some sort of an outage. So again, just something to be on, tuck away, pay attention yourself. If you see anything too, throw it in the chat. I'm interested to hear, there's 50 more ears is better than just one set of ears, all right, on this stuff. This is something we can all kind of pay attention to. All right, then with France, we've got just a quick update on this one. This is what we would expect, is France has a bond downgrade. We've seen this crazy stuff going on in France with, 6 prime ministers in 2 years. Le Cornu, 27 days as a prime minister, steps down, resigns. Francois Macron, the president, is scrambling. What's he going to do? He gets Le Cornu to take the spot again. They reappoint a cabinet. And what's this all over? It's all over cutting the budget. Okay, so there's budget issues here. And so with all that stuff going on, these rating agencies, which are pretty much a scam, and they're definitely politically driven, but they are forced at some point to do a downgrade. Okay, so that's what we saw, is a debt downgrade in France. So lowering their sovereign credit score. Okay, the nation's budget has been the uncertainty point. Okay, and it's definitely at an elevated situation with all that stuff that's going on. This is forcing the funds to sell. As soon as you get that rating, that downgrade in the rating, a lot of funds that own that debt don't show up to buy it anymore. Okay, so this goes back to that bid to cover again, right? What we talk about. We get these debt offerings, 10-year bond, 20-year bond, 10-year note, 20-year bond, 5-year notes, all these different length terms of debt. And if people aren't showing up to buy it, a lot of it's going to be these big fund managers, right, who are showing up to buy this. And if they are getting downgrades, they are restricted from buying it. They can't even buy it. So this just takes away demand, okay? And we know that governments have plenty of supply of debt, right? That's not their issue. That they don't have an issue making supply of debt, okay? That's definitely, so again, reduction in demand, increase in supply, and this is what creates sovereign debt crises, okay? And so this is just another little canary in the coal mine, and it's not unexpected. Like, this is what you would expect based on what was going on over the last couple weeks, okay? And then on this one, this is a quick one. This is Israel Hamas thing. There was a ceasefire violation over the weekend, and then they both resumed the truce. Okay, after some fighting over the weekend, somebody violated the deal. Okay, everybody's blaming everyone else. Of course, this tells you that the war is definitely not settled, and this is why it needs a third party, right, to oversee this. Someone like the U.S. As much as we may not like it, we probably need to oversee this thing, because left to their own, these people would be fighting again in no time at all, and this just proves it. Okay, so the story is Israel, Hamas did this. Israel then attacked Hamas. Okay. And President Trump he was on the plane and he was saying, I saw a quick headline where he said the ceasefire is still intact. Okay. And then he threw out this thing that if Hamas doesn't disarm, we'll have to do it for them. All right. So again, it's a threat on Hamas. We have the drones, we have the technology, we'll come in and we'll just start taking you out piece by piece, is probably what I think that means. All right. That this would be a very tactical, very precise takeout of key personnel, like he did before. Okay, like we've seen him do before with I forget what his name was. The guy that basically Anyway, we've seen him do this stuff before, right? Very tactical things where he goes in and just makes a point. All right. That's what we're seeing with the boats in Venezuela. There's a whole story here with Venezuela that's unfolding. I think, and I'll just briefly mention it today. I think these boats, it's an escalation. It's giving the world a sign that they're going to take out Maduro in Venezuela. And so I'm going to pick that one up here because I think it's an important story in South America, especially. We see Maduro, we see Lula da Silva, okay? We see all this stuff going on in Argentina. I think there's major stuff going on there. And we get the old neocons, right? We're starting to see Rubio exert his will there. We're starting to see this guy. He's been a diplomat for President Trump before. Rick Grenell, he's starting to insert himself in this thing again. He's involved in it. So again, there's a conflict going on here in South America, but I do believe that we're going to see an escalation and either try to force Maduro out or potentially even physically go in and take him out. We'll see what it escalates to, but I think, and why is this? Again, back to China, right? China's got their webs woven deeply into South America. And we need to crack that. Okay. That's part of this whole situation. Again, putting pressure back on China. All right. Okay. This Israel thing, obviously, lots of moving parts, lots of players there. And this deal will clearly need some external parties involved if there's any hopes of this thing having success. Left on their own, I don't think this thing would stand a chance. All right. Trump, Putin, Zelensky, and Orban. Who's going to show up at this thing? Well, for sure, President Putin and President Trump and Viktor Orban's holding this summit in Budapest. Zelensky, he was in the Oval Office last week. I didn't see a whole lot on this, but the rumor was, what I saw was there's definitely some shouting matches here and there. So again, this thing's definitely heated. And what we see here is it's going to be very fascinating to see how they navigate this thing because Europe wants this war. Ukraine wants this war. NATO wants this war, and I think Putin doesn't even really want to stop either. We're the only ones that really want to stop this thing, okay? I think, right? I think President Trump's pretty much all on his own to wanting to stop this. I think he's probably the only guy in the room that really wants this thing to end, okay? And he keeps coming back and saying, look, another 7,000 or 8,000 people have been killed on both sides over this last week. And that's why I think he's threatening these long-range missiles and the guidance systems and so forth, is that he's probably the only person that really wants this thing to stop. If you really think about it, and in the American people, right? And that's who he's working for. Let's hope, right? Everything indicates that. And I think I just have to question stuff, right? So I question a lot of things that are going on, but I get encouraged by, again, we'll see these clips on Canada. I get very encouraged by what I see and what I see the changes in Mark Carney. Could be false. I could be wrong on this. It could be a false read, but I think he's the only one that wants this to happen. I think he can do it, right? If he brokered a deal with Israel and Hamas and Gaza, I think he can hold that thing up and they can uphold it. Can he broker a deal here too? And he's pushing a lot of the right buttons, okay? And it's very hard. I mean, the more you dig into this, you realize how hard this is to stop these long-running conflicts, okay? This isn't like stuff that just occurred. They'll say, oh, Putin attacked in 2020 or whatever it was, and as soon as Biden came in and Trump says, oh, that would have never happened under me, and he's probably correct because he wouldn't have let it happen. But this thing's been brewing for a long, long time. This thing has threads that run way, 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 way back, and especially into Victoria Nuland, and especially back into the days of Yeltsin, when Yeltsin essentially put Putin in charge, okay? So again, this stuff's been brewing for a long time. So this isn't stuff, and we know about the bioweapons labs, right, with the Bidens and all these other guys, what was it, Durbin, I think, and it's endless, right? This isn't just something that crept up, okay? This is stuff that's been going on for a long time. Here's one encouraging thing. I've been wanting to show this for a while. Let me show you this because this was encouraging, and I just didn't get a chance to get to it last week. So this is this lady, okay, Yulia Tymoshenko, and she, let me see. There's a pretty good spot up there. Okay, so she's previously claimed that she was contacted by the Trump administration about replacing Zelensky. Okay, she says down here, let me just read through some of this because I've even lost track. I've wanted to talk about this last week, but I've kind of forgotten this one. But I think it's a good time to show it. The conflict between Kyiv and Moscow could soon come to an end, former Ukraine Prime Minister Yulia Tymoshenko claimed. Speaking in a radio interview, let's see, what did she say? The party that she was optimistic about the outcome, but declined. Okay, here's the important part in the pink and the purple down there. Knowing certain information, again, this is someone on the inside, right, with their ear to the wall. Knowing certain information, okay, I believe the end of the war is near at hand. We all hope for it, and we are working toward that, Tymoshenko has said. So she served as prime minister from 2007 to 2010. She built her early political career in Ukraine's energy sector, earning the name the Gas Princess. In 2011, she was sentenced to prison for abuse of power, but released after the Western-backed 2014 coup in Kyiv. So again, probably a real person. Again, I could be wrong, but she seems pretty real. If you get locked up for, she obviously got into politics, knew what she's smart enough to get involved in private industry. Okay, gets the title the Gas Princess. That's pretty impressive. And then she gets locked up. Okay, and then she gets out based on the coup in 2014 coup in Kyiv, which again, that whole thing is Victoria Nuland driven. And but again, according to the Politico report from March, Tymoshenko was among several Ukrainian politicians supposedly contacted by the administration of U.S. President Trump to discuss a potential successor to Zelensky, whose presidential term expired. So here's the thing. Maybe this is what they were fighting over, right? Maybe this is the arguments that were going on. Again, I wasn't there. I don't see any footage from it. Maybe there is some out there, but I haven't seen it. But the rumor was, or what I saw was, that there was arguments going on between elevated conversations between Zelensky and Trump and the team. And maybe this is what it's over, right? They're trying to basically say, look, this guy is running martial law over there because of the war. The war continues to go on. We need to get him out of there. This guy is a puppet for this whole European, what's the guy's name? I can't even think of his name right now. But this guy's definitely a propped up puppet. I mean, I don't think there's hardly anyone that questions that at this point. But this is good. This was good information. I think it applies today. So I'm glad we didn't. I wish I'd run it I wish I'd talked about this last week. We just didn't have the time. But I think it fits well with today's stuff. Okay. And then the Canadian stuff, this Canadian trade deal. All right. Before we jump into that, I want to look at some charts. Let's jump in here and see if you have any comments. Okay. So sounds fine to me. Okay, good. All right, good. We've got sound seems all right. Okay. I hope so. I rebooted. Sounds fine. Okay. Who knows? Maybe it's with the internet stuff. I don't know. I've been having major internet issues here with, especially watching some of the financial news stuff. It's just been a nightmare on a couple things, and I can't figure out what the real cause of it is. I don't know if it's my internet or it's the back end with Hulu, because I watch some of this stuff on Hulu, or if it's Bloomberg, because I watch again Bloomberg and CNBC and these others, even though I don't really like to, but you kind of have to. Good morning, Jay White. Good to see you. China gives me a rash. Yeah, I think it does all of us. Probably even the Chinese people. It probably gives them a rash too. The whole situation there. China buying farmland is often talked about, but the amount of real estate in California owned by China would be an interesting number. Yeah, I think we can do that. I mean, ChatGPT will probably give it to you. I mean, at least give you a decent, or any one of these, right? There's so many of these different things, and there's one that. Well, I'll get into that. There's one Enoch that I think we have a chance to actually influence some of the economic and financial data that goes into it, which would be great because they're propagating it. I heard the other day through the grapevine that Mike Adams, who's running this Enoch, okay, I forget what he is, the Health Ranger. That's what he goes by. That's his tag name, the Health Ranger. He's putting this Enoch together, his own AI, and I think it's coming along, right? I think they're seeing good results out of it when you do a search in there. They're getting some. I've heard some things are bad, and again, it's fed mostly with medical stuff. That's his background, is healthcare stuff, and I've heard that it has struggled at times. People have said, yeah, it's giving out false information, not false, poorly arranged information. Okay, it's just not well arranged when it comes back, so it's confusing. But they said he had 75 to 100 terabytes of data coming out of Chinese medicine. And again, I would hold, some of the Western medicine, and that's the part of this, roundtable this week, is to hopefully also not just show the technocracy angle of it, but that we've been lied to for a long time because it's big business, right? When you look at the numbers, the lobby out of the pharmaceutical, it just dwarfs anything else. Okay. So we've been lied to for a long time on this side. Now, it's not to say some drugs aren't good or valuable and so forth, but there's a lot that have definitely been propped up. And a lot of it's because of this very, very strong lobby and the very liberal advertising that they get to do with commercials and so forth. The Eastern medicine definitely has some value to it. The problem is extracting it, organizing it for the Western society that has very little connection to that Asian medicine, the Eastern medicine. That's what Mike Adams is doing. 75 to 100 terabytes of Asian data, okay, that they're trying to feed into this Enoch. All right, so to be, again, I'll keep you up to date on that as I hear more on it because it's definitely fascinating to me. Like, that's amazing. I mean, 75 to 100, what is that? I mean, how do you get 75 to 100 terabytes of data? I mean, that's just insane, right? Well, I know how you get it. You get it with, a population of 1.4 billion. That's how you get it. Okay. All right. Rachel Hawk, there's a map that will show just that. Just search. Okay. Thanks. I will. Okay. They killed Parler. Yes. Spotty internet. Canada tried working with the EU to counter Trump. Then turned to China. Gordon, this is good. Canada tried working with the EU to counter Trump. Yep, you're right. That's exactly. And Trump warned them, right? He said, don't try to do it. And they still tried to do it. Okay. Then turned to China. Okay, good. Once the China deal happened, they will be out of options. Look, there's a lot of angles at this. You come at it from that angle, you can come at it from a lot of different angles, but in the end, it doesn't really matter what angle we come at it from. Do you move the ball? And I think the ball is being moved, right? That's the key. Okay. And I think you're spot on there. All right. Internet is good out here on the ranch. Okay. Where's the ranch, David? Kind of curious about that. Love that you're out on the ranch. Okay. All right, let's hit some of these clips here. I want to go and go into this. I think we're ready to, charts. Yeah. We want to look at some charts. Okay. So let's take a look at this. All right. I think we're good on this stock market. Let me just double back to this because, we had that happen on Friday morning, right? The S&P came right back down into the 65.74. Okay, that's this white dashed line. Okay, this was Friday morning. Again, pre-market. Overnight, market spikes down, hits this, and then this is that line in the sand. Okay, we saw it come down and hit it last week, the Friday before. Okay. Is there a theme here on Fridays? Low liquidity, early in the morning, right? This one was actually late in the day. So that's what's interesting about this one. This was late in the day on low liquidity on a Friday. Okay, right back in here. All right, we talked about that. Spike down in there. It was definitely, there was some antics going on in there. Let me just leave it at that. Then we get this Friday early in the morning, okay, before the liquidity dries up. So front running it, okay? Is there something going on here? Friday to Friday, late in the day, early in the morning, people are a little bit panicked about the liquidity. Don't think that these fund managers aren't aware of what we've been talking about in here, saying those guys did a rug pull on us on Friday. President Trump released that. He didn't retract it. He let it ride, right? He put it out at 10:57 on that Friday, the Friday back here. Okay, the announcement on China. Okay. And then he didn't come back and retract it or didn't say anything. Besant didn't say anything. Lutnick didn't say anything. No one on the financial side of things said anything. Okay. And then they front run it on Friday morning earlier in the day, right? They spike this thing down. Okay. And then it takes off. All right. And we've seen up and away ever since. Now, we've been talking about this Elliott wave, right? Are we going to get this second wave down? Let me throw that in here. Okay. Were we going to get this second wave down, right? I have the thing right below us there. And we were talking about wave one down. We've seen two of those, right? At both Fridays, we've seen this wave one down, both strong selling into that 65.74, right? And then we see the consolidation. We've seen two trend channels, okay? The Friday before we were watching, or the Thursday before we were watching one, and then it broke, okay? But we never really got that. That was the wave one down. Then we saw the next wave down on Friday, okay? Again, I would say not wave 2 to 3, but definitely another wave 1, right? So again, is there a topping pattern going on, or is this a sideways move that's about to break out to the upside? If it can't break that, where that 1's at, right? When it consolidates up to 0.2, if it can't break that 1, then there is no wave 2 or 0.2 to 0.3, okay? Because that's 0.2 to 0.3 is really the second wave down, All right. So we haven't gotten that 2 Fridays in a row, yet we've seen some significant selling in there. Okay. So that should be telling us something, right? We need to be alert of that. And don't think that these fund managers weren't aware that the liquidity's dry on Friday and they weren't aware that they left them hanging out to dry, okay, on that Friday. With low liquidity, risk and, lots of risk, not knowing what's going to happen over the weekend. And, they obviously then the market gaps back up on the Monday, right? So the administration comes out over the weekend and lightens the load and, the market rallies. That was last Sunday. This Sunday, it just started one little sell off. I think we had a gap up and then a sell off, but nothing major, right? It was just typical antics on a Sunday night open. A little more than normal, but pretty much not far out of the norm. So now we see this thing moving. And the question is, let's look at the Dow, right? We've been watching this Dow. So that's the S&P. That's the big dog, all right? That's why we want to watch that. Came back to the 65.74. We know we have tech stocks coming in focus, okay? The earnings and tech stocks. Are people taking a breather in the tech space? A little bit. Where would they go instead? Maybe into the Dow, okay? So this might be the place to spend a little time. Can this thing hold above that purple shaded zone up at the top? Okay, we had the 2 prior highs. It tested it a third, a fourth time. Then it finally broke through. Was having again, this Dow really, really, really struggled compared to the NASDAQ and the S&P. Is it going to get its chance to shine? And can they run this thing? Can this thing make kind of a stealth move for a little while? Can it get going? We talk about this. Capital flows coming into the U.S., lots of big cap names, safety play, okay? And not only that, it hasn't participated. So there's 2 reasons, right? The safety component to it and the fact that it hasn't really played along on the breakout to new highs. It's barely broken out to new highs. Can it have its day in the light going into the end of the year? And can this thing make a run at 50,000? That would be the interesting thing. So it's sitting at like 46. I'd say it's kind of in that toss-up zone where it could still crack below. That's why we're watching that 65.74. But if this Dow starts to go, if we start seeing some signs on the short time frames in this thing that it's holding at levels, it comes back, retests the level, and they come in and buy it, that's going to give us indication that this Dow might run into the end of the year. Okay, there's a chance. And what are we going to measure the risk against? 65.74 in the S&P, 24.126 in the NASDAQ. Those should be good indicators until we get new stuff in these markets. All right, let's look at this Russell. Hopefully I've got that one up and ready to go, and this isn't a train wreck. Okay, so this will work. Here we go. There we go. Okay, get rid of that. So again, it got above that pink level, right? Prior highs, 1, 2, 3 times up there. 4th time up, it's broken through. We had that KBW Regional Bank Index that came out last week. Again, Jamie Dimon was all over this thing, calling them cockroaches. Where there's one cockroach, there's many, many more. Okay, and there's a lot of controversy. I talked to, again, some of my contacts inside JP Morgan over the weekend, and they're like, yeah, there's a lot of consternation over those comments, and they're calling him grandpa. They're basically saying, like, maybe it's time for Jamie Dimon to go. Who knows, right? He is getting toward the point where he's getting toward the end of his career, but it's just funny to get the insight on it. I'm not sure it adds a lot of value, but it is funny. But the key here is the Russell, right? That's going to be tied to that KBW Regional Banking Index, and we want to see, can this Russell rally, all right? So again, we got our bases covered. That's the key. We have the Dow, we have this big cap, we have the small cap, and then we have the tech, which we're kind of taking a break on with the tech earnings. It's a toss-up. Could it take a break? Could we get maybe slightly worse than expected tech stuff? Maybe flat to not as big of beats, even not as big of beats as maybe anticipated, and still the NASDAQ would have some pressure on it, right? People would start saying, wait a minute, maybe it's time, maybe there is something a little bubbly here. Maybe it's time to move some money out of the tech space and into other things. Where would they go? The Dow or the Russell, right? Maybe that's what we're going to see, is some sort of reallocation here. And again, another push into the end of the year, all right? Maybe. That's what, because at 65.74 got tested and it didn't give you much time to get in. 2 times we've seen the market come down. It's been very hard to get into those trades. Okay, you had to be paying close attention and be willing to stick your neck out a bit, right? But again, in here we knew at least we had that level. 65.74 was the spot where it would have to hold. Okay, let's look at this. I want to take a quick look at this at the dollar. All right. Here is that what we were watching, okay, is this purple shaded zone. We know that the long-term trend on this dollar is up. Since 2008, the trend is up on this thing. You can't deny it. Then we have this converging triangle that ties right into that upward sloping trend channel. Okay, no matter what they say, the dollar is still in an uptrend. Okay, it's not pretty, right? But it's still in an uptrend. And we have this converging triangle that's come together. We've looked at so many times. I probably will skip that because now that's the big picture. This is the micro picture. Okay, what we're doing is we're saying if the dollar could climb above this purple shaded zone. All right, let me just mark that. You can see we had, a little bit of activity in there, okay, but obviously a spike above, right? So let's just kind of negate that. But here we get one, here we get another one, right? Another one, and another one, another test of this thing, and then it breaks through. And so in a perfect world, this thing would have come down and hit and held right in here, and it wouldn't have had this big tail down like that. But again, it's like, trying to shake things loose. That's what you do, okay? It's an overreaction, potential overreaction on the downside. Can this dollar stay above that purple shaded zone? If it does, then we're starting to look at this. Okay, we're starting to look at these yellow circles that I have, a progression up to 100. All right, and we've got energy building here. Okay, on the daily time frame. So that was a micro time frame. That was like 4 hour. I think that was a small short time frame. That was 4 hour chart. This is a daily chart. So basically, taking it up magnification by 5, essentially. All right. And so we've got this energy build going on, and can it get back to this 100 level? That's the key. Can this energy, and if it gets back to the 100, I wouldn't be surprised if it goes right up into that moving average, gets above 100, blows through, comes back and retests 100. Okay. Just to check in. And then that point, people can get behind it. Okay. The media probably won't cover it. The media will still be trashing the dollar like they always do, but we'll know better, right? We'll know that, look, this thing blew through 100, came back and retested it. That's our spot to take our chance in this thing, where you can really start to put shorts on in the euro, shorts on in the British pound, shorts on in this stuff. Now, what I wanted to show here real quickly too is this. Let me see if I think I have this thing ready to go. So I updated the model, and we've got a couple things. Let me go over to this. There we go. Okay. So in here, we've got this, we've got the British pound. We've got signals in the British pound. We have the Forex market. 2 signals on the weekly time frame right here on the British pound, right? British pound futures, British pound Forex. Okay. And then we have this, the Euro futures, weekly signal, Euro FX weekly signal. Okay. Then we have, let's see here, the Australian dollar, a little bit of a signal in there. Here's what I really wanted to get to was the S&P, okay? The S&P and the NASDAQ. That should do it. Okay, so remember, 2 weeks ago we had red all through here, okay? We had red all through here on the weekly, okay? We had the same thing here on the NASDAQ, all red and all red, right? And then it's burning off. So now what we can see is the overvalued starting to burn off, okay? And on this S&P, we have a harmonic structure in here, right? So 67.14, 66.91 with a potential move of 200 points in this thing. Okay, so that sort of fits. I think everyone can see that. Hopefully it's big enough you can see that. Okay, that's the takeaway in this. We're also getting harmonic structures in the Dow, okay? So this is going to be interesting on the weekly. We'll start laying this out, okay, right here. Let me just highlight that in yellow. Okay, so there's the Dow. Here's the German DAX. We're getting the same thing in the German DAX. So we're starting to get some harmonic structures popping up. We're getting in the UK FTSE. Okay, and if I come over here, we've got... All right, that's pretty much it. So this sort of fits with our concept, right, that we've been working. The Dow, potentially the Russell, right? Not so much the S&P and NASDAQ, although we do have a signal in the S&P. So this is getting interesting. All right. And I think that covers it. Let me see if there's anything else we want to cover for this week. Anything in gold. So you can see gold starting to get pretty overvalued here. We had, daily and weekly is somewhat overvalued. So we've got the red. We've got silver starting to build strong overvalued on the monthly over here, right? This one. I don't know if it'll update. Yeah, for some reason it's not showing up red. Okay, but the point is this area right here on the silver. Okay, we've got the weekly and the monthly are getting overvalued on the silver. And then we'll talk about this later this week. We're getting a little bit of undervalued short term on the crude. We know that it's pushed down into the 57 level. So again, 57 remember, we're not really talking, we're not calling for crude oil to make a big move down. What we're talking about is sideways to down. And at some point, people are going to come in and support this market, right? Because again, the Saudis don't want low oil. They need to still make money. They're willing to play ball on a global level, but they still want to make money. Okay, so I think we have to be careful here, right? We don't want to, this isn't a call for this crude oil to get crushed. This is just a call for crude oil to go sideways to down, okay? And then we've got the same thing in this in the natural gas, but we'll come back and look at that, right? We've got undervalued on the monthly and the natural gas that's coming in. So this gives us that upward bias in the natural gas, okay? And you can see the crude oil only has undervalued on the shorter time frame. The natural gas has undervalued on the longer time frame. So again, the concept is down to flat, down to sideways, in the crude oil, up, longer term up in the natural gas. All right, so we'll come back and look at that stuff this week. Now, let me, there we go. Okay, so let's go ahead and start getting through some of these clips. I want to hit this stuff. We've got, there we go. Okay. Let me come back in here. All right, let's go ahead and run this one. This is of Mark Carney. So this is President Trump and Mark Carney about a week ago, 2 weeks ago, 1 to 2 weeks ago in the Oval Office meeting. Didn't get a lot of coverage, but this is just get a flavor of where these guys are at. Okay, this is not the same meeting that they had a long time ago.
Mr. President, have you identified programs to eliminate under this shutdown?
Oh, sure.
Which ones?
We have a lot, I'm not going to tell you, but we'll be announcing it pretty soon. But we have a lot of things that we're going to eliminate and permanently eliminate. One of the things that we have is some advantage, you could say. But because of the shutdown, which I think they made a big mistake, we're able to take out billions and billions of dollars of waste, fraud, and abuse. And they've handed it, on a silver platter. And Russell Vought, he's a serious person, very serious person. And he's sitting there and he's getting ready to cut things. And this is something that was handed to us by, I assume, Schumer. I just don't know if Schumer has any power anymore. I look at your leadership, I don't know who to speak to. I'll tell you what, I'm getting calls from Democrats wanting to meet. I never even heard their names before, and they're claiming to be leaders. The Democrats have no leader. They remind me of Somalia, okay? And I met the president of Somalia. I told him about the problem he's got. I said, you have somebody from Somalia who's telling us how to run our country. She's from Somalia. He said, would you like to take her back? He said, no, I don't want her. Okay, you know who I'm talking about? Say it again, please.
How many permanent jobs are you talking about to be eliminated?
Well, I can tell you, I'll be able to tell you that in 4 or 5 days if this keeps going on. If this keeps going on, it'll be substantial. And a lot of those jobs will never come back. But you're going to have a lot closer to a balanced budget, actually.
Okay, so that one was a little bit more on the government shutdown. Here's the one on Mark Carney where it gets pretty interesting from the Canadian side of things.
Is there anything the Prime Minister has done that's making it more difficult to reach a deal?
Say it?
Is there anything the Prime Minister has done that's making it more difficult or easier to reach a deal?
No, I think he's a great prime minister. I mean, he could represent me anytime. I will tell you, I'm not saying that because he's here. No, he is a very strong, very good leader. He's a nice man, but he can be nasty. He can be very nasty. Maybe as nasty as anybody.
How?
I think Canada. Let me put it this way. I can tell you this because I deal with lots of leaders all over the world. He is a world-class leader. He's a man that knows what he wants, and I'm not surprised to see that he won the election and won it substantially, and I would think he's more popular now. He's a good man. He does a great job, and he's a tough negotiator.
So then what's holding things up? If he's a great man and you want to do a deal with Canada, why aren't you?
Because I want to be a great man, too. Thank you very much. Thank you, everybody. That could have been.
I think you got that one.
That could have been. Thank you very much. Thank you. Thank you very much. Hard to finish.
Okay, so President Trump at his best there. Funny, perfect, clincher on the joke there. But you can see a better sentiment, okay, between these guys. And this is where it really gets interesting. Here's some tough hitting questions. This was an interview that was done with Bloomberg over the weekend. It's this new lady who's, I don't know where she came from, but she definitely is getting backed by Bloomberg to do interviews like this. So it's going to be interesting if she can continue to stay this hard hitting with interviews. But she goes right at Mark Carney on this stuff. So let's check this out.
What is your strategy for when the US, Mexico, Canada trade deal is reviewed next summer? Are you hoping the US economy by that stage is in a position where President Trump takes a different view on tariffs?
We want the best for the US economy, just as we want, slightly stronger, we want the best for the Canadian economy. But so no, our strategy is not to expect some weakness in the US economy that is going to change US negotiating position. Our strategy, part of our strategy has been to pursue the best deal for Canada. We have the best trade deal at the moment. 85% of our trade with the United States is tariff-free. We have the lowest average tariff against of any country with the U.S. It's 5.5%. So we're in a good position now with two important caveats. One is your question, what's going to happen with the renegotiation of what they call USMCA? And secondly, some key sectors, steel, autos, aluminium, forest products being the main ones. We'll make it increasingly clear that in certain sectors, particularly, the integration of the Canadian and US and Mexican economies is essential to US competitiveness. So in steel, in autos, as two examples, that the linkages are so tight. They're so tight such that the the US content in Canadian finished automobiles is higher than the average US content in American automobiles. So we make America stronger in these sectors, and our strategy is to make sure that that is as well understood as possible.
Okay, so
Okay, and here she is with another question. I think these get harder hitting as we go here. Let's check this one
your
out.
language, though, has changed on President Trump since you came to office. Do you remember when you talked about him as a bully that needed to be stood up to? In February, when you were campaigning, we're going to stand up to a bully, we're not going to back down. And yet now you're much more likely to talk in more conciliatory terms. I mean, obviously one is campaigning and one is governing, but perhaps people who wanted you to do the standing up to the bully might feel that you haven't done that as much as you suggested when you were campaigning.
Well, let's be clear the actual situation. We're one of, there are two countries effectively that put retaliatory tariffs on the United States. Two countries in the world. We put them on, we kept them on up to a point where they ceased to be effective. We got to a point when we took our retaliatory tariffs off, we had 85% of our trade tariff-free. When we put them on, given the steps that President Trump had taken, it was a third of our trade was tariff-free. So, strikes me that that's pretty effective.
Yeah, but he has shown his power, hasn't he, over you? Like, for example, your digital services tax. You announced it, he hated it. You had to back down on that.
The digital service tax was announced multiple years before. It was just effectively coming in. It was coming into effect. Look, the United States.
And it couldn't, because President Trump wasn't having it.
Well, we made a decision in the context. And let's what happened after we took that digital service tax off? Within weeks, the president confirmed, in writing, formally confirmed in an executive order that tariff-free status for the vast majority of our trade.
So there was something broader at stake on trade. I get that. I get that, but I just wonder how you reconcile yourself to that, because it is different from the tone you struck before.
My responsibility is to get the best possible deal for Canada. We have the best deal in the world at this point. Now, that next issue is, where is the USMCA negotiation going to land? Yeah, the trade agreement, the broader trade agreement is going to land, and that's being prepared for that and working with the U.S. in that. But let's be absolutely clear: the United States does have tremendous leverage in the near term over Canada. over the European Union, over the United Kingdom, because our economies became linked on the basis of certain assumptions. Those assumptions have now changed. And so part of this is stabilizing that relationship. It's the U.S. right to have different priorities. We respect that they've made that choice. We look to stabilize the trading relationship. Okay, what are the new terms under the new objectives of the United States that are in the best interest of Canada? And then the big thing that we do, and a big part of, I think, why I was elected, was what else are we going to do? And one of the core points that we've made from the start is that we can give ourselves far more than the United States can take away. So we have agency. We can have one Canadian economy. We've taken major moves towards that one Canadian economy.
It takes time.
It takes time. It takes time, but it's worth it, because we never want to be in this position again. We never want to be in this position again. And so that's building at home, and it's diversifying it abroad. We're having this interview in London. Part of the reason I'm in London is our deepening our trade relationship with the UK and with Europe. Exactly.
Yeah, because 75% of your trade is with the United States. And
Okay, some revealing things there. 75% of trade is with the United States. He's still connected with the UK, right? He's had background with that, Bank of England, right? He's been the head of the Bank of England, been the head of the Bank of Canada. He said before he sides, basically he's a European resident, okay? There's no mystery here that this guy is clearly a globalist, but I sense a tone, a little bit of a change in tone, that he actually does care about Canada a bit, okay? Because that's what we question out of the gate. Is this guy just, hanging out on the northern, boundary of the U.S. to achieve a globalist agenda? But President Trump's called him out. Now he's saying, we don't ever want to get stuck in that spot again. They're in a bad spot, and he's got to dig them out. And it's only going to get worse because there's a big competition here over cars and automotives. President Trump says, hey, look, we're okay with Canada doing fine in automotives, but we're in competition with you. We want to make them here in the U.S., so we don't really need you. And he said that many, many times to Carney. We don't really need you. We don't need this. We don't need that. And he goes through and talks about some of the tariffs. I mean, some of the tariff rates that were pushed through upon us. Now, hundreds of percent on one of them, I think, was over 400% on one of the tariffs. Okay. Here we go. This is one more with interview with her. And then we've got a trade representative that's worked for President Trump. So this is one more with Carney and this Michelle Hussein, okay, who's doing this interview. And I think it's pretty good. I mean, she's hitting him pretty good. Okay, here we go.
have you learned anything from President Trump?
Have I learned? I've learned lots of things from President Trump. You always learn things from people. I've learned that the value, I don't fully subscribe to this, but I see the effectiveness. The value of the term they would use is flooding the zone, of doing multiple things at the same time, and the effectiveness that can have. I think that he has a very effective way in his own almost unique manner of framing issues and of dominating the agenda, if I can put that way as well.
I even wondered about the way that when you cancelled the carbon tax, you signed it on camera with a flourish. It was like executive order style. Have you learned an element of performance, like you have to be seen to be doing the job in a certain way? Because it didn't feel very Canadian to do that, the signing on camera with a flourish.
I think that, I don't know that it's interesting. I wouldn't have ascribed it to him per se. I just think that in a time when there is a lot of pressure, people are under a lot of pressure, there's a lot of uncertainty, the value of being very clear. So I'll take the example you used. That was the first day that I became Prime Minister. The first thing we did was to cancel that carbon tax. The next thing I did was to come to Europe, come to the UK, and to the Canadian Arctic, the three founding peoples of Canada, the French, the British, and the Indigenous Canadians, and to underscore our sovereignty, our history, but also to set up trade agreements with the first two, and a major intention to invest in our Arctic in defense and security. And so both of those things had substance. We canceled the carbon tax. Those trips had substance because they were setting up trade agreements and security, but they also had, yes, symbolism, history, sovereignty, action. And when you're in, sorry, Michelle, but when you're in a crisis, particularly, this case, a trade crisis, an economic crisis, a crisis of sovereignty, given some of the points that President Trump's saying about the 51st state, when you're in a crisis, you need to not just act decisively, but be seen to act decisively. And that's what we were doing.
All right, so right at the beginning of that clip was the most interesting thing when he says, I don't really subscribe to this thing called flooding the zone, but it is pretty effective. Look, these guys know how to flood the zone. That we've even heard that. How many times did we hear that during Event 201 before COVID, right? You have to flood the zone. You have to flood the zone, flood the zone, flood the zone. There's one thing these World Economic Forum global elite, knuckleheads know, it's flooding the zone. That's what they do. The problem is President Trump's turned this on him. Okay. That's what I think. I think he's turned this on this guy and he's outmatched him. Okay. You saw him in the Oval Office. I mean, he dominated that conversation and he said, yeah, I want him to be a good guy, but I want to be a good guy too. And the place erupted. Even JD Vance didn't know what to do with himself. If you watch what he did on the couch there, he was almost like, whoa. I mean, this guy just laid it down on Carney, right? Or on the environment, right? He just basically said it was perfectly timed, right? A comedian couldn't have done it any better, right? It was just bam, he hit him so hard. And even Vance, and again, I don't trust Vance because I know his background, but even he was like blown away by that comment by President Trump. Okay, so here is a trade representative that used to work for President Trump, giving us some of the inside scoop on how he thinks, okay? And she's been there with him while they're doing these negotiations.
Didn't negotiate up close in a number of instances. And I think he's actually quite transparent about his negotiating style. You're seeing this where he is not afraid to take the big swings. He is not afraid to use threats. He's not afraid to use strong incentives, right? There's both a carrot and a stick approach happening here. But I think at the end of the day, he is a deal maker and he understands that for a deal to work out, there has to be something in it for both parties. But a good deal is one that makes both parties better off. So at the end of the day, in terms of negotiating between the United States and Canada, I certainly expect that whatever landing zone we ultimately do arrive at will be a better arrangement than the one that we started with.
Okay, so it gives you some inside play on that. And I think it gives you perspective on, again, she said he's not afraid to swing for the big things, okay, but he realizes it needs to be something in there for everyone. It's just negotiating, right? This is back to the art of the deal. This is pretty basic stuff, I think. But again, not afraid to swing for the big fence, for the big one. And that's the thing that differentiates, him on a global level, okay? And I think people don't know how to deal with that because they just can't, they don't have that broad of shoulders, all right? Okay, so here's the last one with her. Here we go.
Yeah, I think it is a marked improvement. You've actually heard even this week, the U.S. Trade Representative, Ambassador Greer, was asked about how negotiations were going with Canada, and he said that they were going well and that the mood had improved significantly, and that came from the top, from Prime Minister Carney's interaction directly with the president. What I have seen, I've tried countries try all types of tactics with this president. And the ones that are the most successful at getting a deal and de-escalating tensions are the ones that meet him with more of a workman-like mentality. And that is, where is the president substantively? Let's just get on with it. Let's get a deal on the table. Let's do away with some of this atmospherics, these threats and counter threats, and really just get down to brass tacks. And I think that's what the Canadian negotiators are doing right now. And that's why you're seeing such a warm reception on the U.S. side.
So somehow on that, I think the Globe was blocking, but I think her name's Karen Shaw. I've seen her on before. She's very sharp, very well spoken, knows what's going on. Obviously, to be a negotiator, underneath the administration, any administration is you have to be pretty smart. But under the Trump administration, I think you get challenged pretty well. But she laid it out there, that just get to it, And I really think that is what President Trump has forced Carney to do, okay? And so what we've seen here is Canada is not pursuing counter tariffs, okay? We've seen the Canadian trade rep since that first meeting, the first couple clips there with Carney in town. The trade rep has been in D.C. since then, okay, at meetings. So again, this is that work. This is exactly what she's describing there, okay? And so the mood has improved significantly with Canada. And the real winner here is it's really both the U.S. and Canada, okay? Because Canada is being held accountable, all right? We don't really want a weak trade partner to the north. We want them to stand up for themselves. Hopefully, Carney's doing that for the Canadian people. President Trump's forcing them to be competitive in this automotive space, which they've milked us for years on that space. And then who's the real loser here? The real loser, I think, is China. Okay, it's this gang tackling, right? It's this, we're not going to let, and again, what is China? Who is China? Okay, we talked about that on Friday with COVID. No one being held accountable for that, for shutting the world down. Okay, this use of rare earth minerals and metals, okay, and then the fentanyl, which again, they say, oh, none of it was coming across the Canadian border, the northern border. But then I don't know, I don't think it was in here, but I was watching something somewhere, one of these clips, and Carney said, we've cracked down on it. So the question is, they said there's nothing coming across the border, and then finally they come back and admit that there was and that they've cracked down on it. Now, I don't know how much. I haven't heard numbers as to how much, but those are the big talking points. The soybeans, right, the fentanyl, and the minerals. Okay, those are going to be the big ones this time around. All right. So I think we're through that stuff. I'm going to hold off on this stuff with Colombia. There's a lot of stuff going on in South America, right? Trump cuts off aid to the Colombian leader, Petro, calls him a drug dealer. We've got this is a clear agenda that's being built around Maduro of Venezuela. Okay, we see Lula da Silva, the tariffs being targeted on Lula da Silva. Remember, we run a good trade situation with Brazil. We don't run a deficit. We run a surplus, okay? So that wasn't the whole key there. The key was a political thing to stand up for Bolsonaro. And then we see this credit swap building with Argentina, 20 billion. It actually turned into 40 billion. Okay. So I want to get into that this week, what's going on in South America, but we'll have to hold off on that for today. But that kind of gives you an idea of, it's a very clear situation that we're going after. We are trying to get the reins back on South America. Okay. And what is that? Who's the loser there again? China. Okay, because China spent a lot of money with influence, for instance. And we want to look at two more charts here, and then we'll be done. We'll look at the Canadian dollar real quickly, and then the soybeans, right? Last year, I think 1/5 of the China's soybeans came from the U.S. This year, this harvest season, zero, nothing. So again, China can say that it's because of the holiday or this or that. They can blame the rare earth minerals that they're restricting around the world on whatever they want. But the reality is, when you see it in the rare earth minerals and you see it in the soybeans, you know that they're trying to use their influence and make a point. And the question is, will they be successful at that, or is it just a desperation attempt? That's why we looked at the economy of China. That's why we looked at those charts at the beginning to see, like, how are they really doing? And we have to really believe that those numbers are worse than what we're seeing, okay? Because they're either that or they're worse, okay? That's the best case scenario. Because if it was better than that, you know that they would be showing them. They're not downplaying anything, okay? Why? Because they're not getting foreign direct investment. They're doing anything they can to attract foreign direct investment. Why are they not getting it? Because the system's breaking, okay, for them, right? They're being called out. The game that was China seems to be coming to an end, and the pressure keeps getting put on them, okay? So that's the whole concept. And at some point, we got to dig into Mexico too, because there's a lot of stuff going on in Mexico. And that gets into the digital ID and this whole surveillance thing and the technocracy and the control over the people of Mexico. So we'll get into that too. A couple things to do. Again, south of the U.S., we got to get into that stuff. All right, let's take a look at this. I want to look at this Canadian dollar real quickly on the monthly time frame. Let's take a look at this. We've got, let me get rid of this. Clear. Hopefully this works. I think so. Okay, that works well enough. All right, so here's a Canadian dollar on a weekly time frame. Let me go to this monthly first. Okay, so what we see here on this monthly is, again, keeping that Elliott wave in mind, right? We have this, let's just say we have this top, then we have a push down. Okay, then we get this consolidative pattern through here. Let me just throw a little bit of a trend channel. I've got a trend line on here, but let me just throw the channel so you can see the consolidative kind of range right here. Okay, something like that. You could probably connect it back to here, I think. Let me just do that. Let's do it while we're at it. Okay, so we've got this low here, this low there. Let's go back and connect it to here. Okay, so then we can start to see we've got we've got this, we've got a little bit of congestion through there. We've got a retest up in here and a retest there. Okay, then we've got this down in this area. Let me get rid of this big one. Boy, I want to grab it. There we go. Okay, so then we have these lows. And you can see we're getting a really tight consolidation pattern in here that goes right along with the energy build, right? What's in that blue box. Okay, so we're getting an energy build. We've seen that big wave one to wave down to wave one, right? That big push potentially, okay? Then we're getting this consolidated phase. Are we going to get a wave two, 0.2 down to 0.3, okay, after this consolidation from 1 to 2? We have the energy build, okay, and we're pressing and it's consolidating really tight, okay? Markets breathe in and then they breathe out, okay? So which way is this Canadian dollar going to go? This is why we go through this stuff with Canada. Where does Canada stand? Let's be realistic here. Mark Carney came in thinking they'd play the same old globalist game. It looks like that game is over. Canada's going to have some readjustment to do, okay? And it might take them 10, 15, 20 years. This might not be something that they can fix quickly, okay? There's a lot of structural and Trudeau destroyed that place, right? And, Carney has maybe been neutral so far. There's a lot of work to be done there. He'll probably be long gone before Canada ever works their way out of this. So can this Canadian dollar weaken? Okay, and this is, remember, dollar on one side, all these other currencies on the other. This is another one of those currencies. We're watching the Australian dollar, watching the British pound. They all have energy built up like this, okay? And everybody trashes the dollar, but if the Canadian dollar starts to go down, if the Australian dollar starts to go down, if the British pound starts to go down, if the euro starts to go down, right? If the Japanese yen starts to go down, right? Or continues down, dollar's going to get pressure on the upside. That's why we look at the dollar. That's why we're looking at these. Okay, so let's look at this weekly because I think it shows us clearly. You can see a shelf here. Okay, 1, 2, 3 times down. This last bounce was pretty weak. Looks like it's going to be a lower high. There's a fair amount, little bit of an energy build there. If this Canadian dollar starts to break through this purple line, it might be off and running. So what would we expect? Some event that pushes it down through there, comes back up and retests it. And that's where, again, you probably need to, this isn't a bad spot to get in for the idea that it's going to go down and through there. If it goes down and through, you probably want to be watching to take a little bit of profits. Then it bounces back up into that purple line. Should you get it? No guarantee you're going to get it, but markets like to come back up and retest. If you get that, now you can sell against that purple line. Okay, remember, the floor becomes a ceiling. The ceiling becomes a floor, right? Support becomes resistance. Resistance becomes support. Okay, typically, quite often. Okay, let's take a look at these soybeans real quickly. We've got this. Now, the soybeans are starting to bounce. We talked about these pink zones. Let me get rid of this, because this is from last week. All right, now, it would have been really nice to see the soybeans go down here and get the full downside objective at 976. Okay, it still might happen, right? We're still below the pink shaded zone, okay? We're right now at what? The downside 2/8, it looks like right there. So that's a downside 2/8. We've seen more reactions to this. Okay, so this harmonic structure seems to be solid, right? It seems to be in place. All right, you can see a little bit of reaction down in here too. Let me just highlight that. So lots of good reactions against this harmonic structure. It seems to be working quite well. If it can stay below the pink shaded zone, there's still a chance that it's going to get down to this 976. If it gets down there, that is a spot where we can say, okay, the energy is potentially dissipated. How long will this trade deal? What if we got a headline that says, deals off with China, not going to meet at the APEC summit? Soybeans will probably come down to that level. We know that there's so much soybeans sitting right now in, obviously they're in harvest season, and there's a lot sitting in storage. And they don't know what to do with it. So this is what's creating these depressed prices. Let's take a look at this. Let me see if I can show you. All right, so lots of stuff on this chart, but you can see soybeans they're not at all-time lows, right? But they're definitely at a consolidative to weak spot, right down in here. It would be nice to get that 976 because it starts to push it down into this area, right? Again, patience, trying to get it as cheap as possible, okay, with the idea that soybeans in the end will probably, move higher. And then we get into what would be the catalyst for that. But the key right now is back to this, we're just watching this to see, can we get this 976? That would be a great wish list purchase at 976. Might not work, might hit 976 and blow through. It's possible. But if it got there, that's a spot where you've got your risk starts to really go down at that point. And you have a line in the sand to measure the risk against. All right. So hopefully that fits. We'll come back, look at South America this week. I want to dig into the energy this week on Wednesday. And then equities on Thursday, of course, we'll start watching these earnings come through and see what's happening with the NASDAQ, see what's happening with the Dow, kind of go through that whole thesis, large cap, small cap, NASDAQ, S&P, what's going to happen. We'll lay out those new harmonic structures, overlay those over what we've got, the 80, 8, what I even forget the number. What is it? I get so many numbers in my head. This 6574, the 6574 in the S&P, right? That will overlay these new harmonics over that stuff. We have one in the S&P, we have one in the Dow. Is that telling us something? I need to double check this Russell too to see if we've got one in there, because that would be interesting. And with that, I think we're done. I think we're good. I think we covered a lot of ground today. We updated Canada before something happens with Canada. That's the key, right? We're trying to stay out front of this stuff and get our head on straight for when we see this stuff come out. One, we're able to absorb more information because we have a background in it. We've got a backbone to attach things to. And we can say, and we can start to say, when we get headlines, we can say, that doesn't make sense. That's garbage, right? Or this. And then that's how we can see the manipulation when they're manipulating a market in a direction. And you can say, you never know we never know 100%, but you can say with 80 to 90% probability, that story doesn't hold any water, right? That's garbage. All right. So with that, have a blessed day, everyone. And we'll see you tomorrow. Hopefully I have a song to play out. I don't know. Maybe not.